Taxes. Nobody likes paying them, but we have to anyway. So here's what we're gonna do today. I'm gonna show you guys what changed for the tax year 2026, what it actually means, and what I would do this week so you don't end up owing money later and wondering why your paycheck feels off. And I'm keeping this practical because this is for anyone who earns money and files taxes, which is basically everybody watching. All right, so first let me show you what changed. The IRS released its official inflation adjustment update for the tax year 2026 on October 9th, 2025. So I want to clarify this real quick that even though it got released back in 2025, this is applying to the money you earn in 2026. So you'll see it when you file for your 2026 return in early 2027. Now, most years, this update with the IRS is not some crazy headline. It's just the numbers moving a little bit. But the part that causes the most tax problems is what happens when your life changes during the year, but your withholding never adjusts. And that's when people typically get to the filing season and find out that they actually owe something, or they get a refund and it's a lot smaller than they expected. So let me show you the two main moves in the simplest way. First, the standard deduction went up for 2026. This is the default deduction most people take instead of itemizing. It's basically the IRS saying this portion of your income is not taxed. So for 2026, that standard deduction looks like $16,100 if you're single, or you're married but filing separately, $32,200 if you're married and filing jointly, and $24,150 if you're head of the household. Now, I want to show you guys where we're up from 2025 part, because that's what people really care about. You can see on the screen here, if you're single and married but filing separately, we're going from $15,750 to $16,100. If you're married and filing joint, $31,500 to now $32,200. And if you're the head of household, you're going from $23,625 to now $24,150. Now, here's the honest truth that when most people look at this, they tend to overestimate what this actually does. So if you're single in the 22% bracket, a $350 higher deduction is roughly $77 less tax. Now, this is nice, but it's not life-changing. So that's just the standard deduction going up. The second thing here is that the tax bracket thresholds moved as well. The bracket percentages didn't change, but the income cutoffs did. What that looks like is for 2026, the 24% bracket now starts at $105,700 for single filers and $211,400 for married and filing jointly. And for the 22% bracket, it now starts at $50,400 for the single filers and $100,800 for married and filing jointly. And I want to make a quick note as I go ahead and say these numbers, because people always misunderstand these brackets. This doesn't mean that your entire income gets taxed at the 24%. It only means that the top slice of that income is taxed at that rate. And this is one reason that paychecks can feel a little different year to year, even if your salary stayed the same. And it's because of the withholding tables and thresholds shifting. All right, so that's what changed officially on paper, but now let's talk about what actually matters in real life. Most people don't get these surprise tax hits or these surprise tax bills because the IRS just moved a little number. No, it's not that. It's because most people get hit because their paycheck withholding doesn't match their real situation for that year. And that usually happens after some sort of life change. We're talking about a raise, a new job, a bonus change, maybe marriage, or you had a kid, or you started some extra side hustle, now you're making some side income. And I want to add one more zoom out point that matters here. After the standard deduction got bigger, about 90% of taxpayers take it and only 10% itemize. So if you're spending your whole year hunting for random write-offs to put down, there's a good chance you're just doing work that won't even move the needle. And for most people, the bigger lever here is simply making sure that your withholding is not quietly drifting in the wrong direction. Now, let me give you a simple way to think about this so you don't get lost. I like to think about these things in three buckets, okay? So we have bucket one here is for withholding. Withholding is the money that's coming out of your paycheck automatically. Now, bucket two is for deductions and any credits you actually qualify for. And these are real credits people can legitimately use. So for this bucket, think child tax credit territory, education credits, earned income credit, and the clean stuff like that. Bucket 3 is for documentation. That's your proof you bring to the IRS. We're talking pay stubs, 1099s, receipts for any of the handful of items that can actually apply to you. And I want to add this quick edge case so this all stays accurate. If you're self-employed, your version of the withholding is estimated taxes. Now for you, the estimated taxes are generally due April 15th, June 15th, September 15th, and January 15th. So if you miss any of those dates, you can get an underpayment penalty even if you pay the full amount much later. All right, so to make things a lot easier, we'll make this into one simple method and we'll call it the decision rule. And to help clarify more things, to know where you land, I want to ask this first question with the decision rule. Did something in your life change this year? Like we mentioned earlier, did you get a new job? Did you get that annual raise? Maybe a bonus change? Did you get married, have a kid? Did you start a side hustle, or did your spouse simply change jobs? Now, if you answered yes to any of those things, start with bucket one in withholding. My second question for you guys is, are you basically a standard deduction person? And for most people, they are a standard deduction person. So you shouldn't waste your time trying to create these itemized deductions out of thin air. Focus on withholding and keeping your documents clean. And my third question, to make it all simple for you guys, is do the credits realistically apply to you? Anything you can put towards the kids, education credits, or even the earned income credit territory. If you answered yes to those, pay attention to that paperwork early so you're not scrambling later. So let's go over this recap again so it sticks. If your life changed, start with withholding. If you're taking the standard deduction anyways, keep it simple and keep your records clean. And if credits apply to you, make sure you have the proof to back everything up. Now let me tell you what actually causes the surprise tax bill at the end of the year, because this is where people get caught. Most surprise tax bills happen because the withholding has been wrong for months. And most people don't notice this kind of thing because nothing feels off or missing week to week. So for example, you start a side hustle, it doesn't withhold any taxes, and you forgot to change your W-2 withholding, so then at the end of the year, you just slowly start drifting into owing. Or you get that annual raise you've been waiting for, but you forgot to update your withholding, so it's not set up the way you think it is. And you feel fine month to month with this extra cash, but then filing season comes and it shows you that bill. So let's avoid this altogether and start working on the part that matters most. Here's what you can start doing this week. Start with step one here, guys. Pull up your last pay stub. Don't overcomplicate anything. Just ask one question. Does my current withholding status still match my life right now? And here's what I don't want you doing. Don't guess on these things. Go over to the IRS tax withholding estimator and use it once and update your W-4 if you're off. Then just leave it alone until something else changes. Now, step two, pick your lane. I'm talking about standard deduction or itemizing. And like I mentioned earlier, most people tend to pick the standard deduction anyways. And for most people, the standard deduction suits their needs already. Now, if you're not sure, that's okay. But don't assume you're itemizing if you don't have the actual totals and all the receipts. Now, step three for the actionable things you can start doing this week, set up one folder, keep it in your house somewhere safe and neat and organized for all the tax stuff this year. And what you're gonna do is inside the folder, make three sections. You'll have income, deductions or credits, and your proof. And that's it, you're done. Now in plain English, there are three ways your year can go. Scenario one, you actually take the action this week and you check it this early so the withholding matches your current situation and the filing season is just completely boring for you. And now this is the actual goal here, is to make it completely boring where you have everything you need, you're organized, everything lines up, there are no surprises. Or it can go with scenario two, and this is for most people, tend to do this every year. You could ignore everything I'm saying, you could ignore the urgency of this matter, and then your withholding starts to drift. You forget about it, you put it off to later, and then you end up waiting until March and you end up owing money that you didn't plan for. Or there's scenario three. If you're self-employed and you miss all the estimated tax due dates, you're gonna get hit with that underpayment penalties, even if you pay a little later. So remember to not do these three dumb things here. Don't assume that your withholding is fine and you'll just deal with it later. Because if it's wrong now, it's gonna be wrong for months. And you can end up owing when it comes to filing time. So do this instead. Run the estimator once and adjust everything early as soon as you catch it. The second thing here is remember not to chase random deductions that don't actually apply to you. Most people take the standard deduction anyway, so it usually doesn't move the needle much farther. With that being said, focus on the actual withholding. Use real credits and have clean records for everything. And lastly, don't wait until March to start gathering your documents. Like I mentioned before, if you wait till the deadline, you end up rushing, you're stressed out, you end up guessing a lot of these things, and you start missing a lot of these documentations you need. And it's best to keep that one folder we talked about with your 3 sections so you're not scrambling and figuring out ways how to bring down your tax even further. And one thing you can start doing tonight if you really want to take action, write a quick 1-page plan, write down your current filing status and whether you're taking the standard deduction or itemizing. And write down one thing you're immediately going to check this week, which is your withholding. And then set a reminder to recheck after your next life change. And this is how you start winning every tax season. Now, as we come to the end of this video, let's go over this checklist so you remember everything we went through. Know the 2026 standard deduction for your filing status. Run the IRS tax withholding estimator at least once and update your W-4 if needed. Remember to choose whether you're going to pick the standard deduction or itemize. And don't forget to build that one folder with 3 sections for income, deductions and credits, and the proof. And if you're self-employed, remember that estimated taxes are generally due on these dates, and make sure to recheck on all of these steps after any life change. Alright guys, that's it. That's the end of the video. This stuff isn't really complicated. It is really easy to ignore and it's gonna cost you a lot later. And if this helped you guys, please hit that like to support my channel and subscribe if you want to see more videos of how I break down the most simple financial plans for your whole year so everything makes sense. But until then, I'll see you guys on the next one and happy tax season.